This is our Forex blog for July 24th, 2013. I've been pretty busy working on automated trading systems and also testing our new currency indexes. In the past, our currency indexes were a script that I wrote that was extremely inefficient and used a ton of memory. We had to download all the different currencies, keep it up to date, historically, live, and all the indicators were baked into the one script. Now what we're doing is putting these currency indexes into the data feed so that you can bring up any time frame chart you want. Let's just say you wanted to look at the Swiss. You have basically a chart that comes up and you can add any of our indicators that you want. For instance, the FX power index. Let's say you want to see what percentage of currencies are trending up on the 15-minute time frame. You want to plot it as a color candle, and we're going to use our superfast DSP. So this lets you see how strong the Swiss is. You know, they're in this pullback. It really wasn't that weak. You know, you can see it went up here and it wasn't really that strong, and it kind of failed. You know, it wasn't able to get over that high and broke down. Right here is dark red. Obviously, that's a trend that goes down. When you see dark green bars, you want to buy the pullback. You know, you can see it went up, by the pullback it went up, by the pullback it went up, and it's run out of steam up here at the highs. And it's not a coincidence that the market, you know, reversed. So by having it as an actual chart instead of a script, which I had to hard code all the studies, you can add any study you want, even ones, you know, I don't really even like the RSI. You can add a RSI, MACD, and for anyone who's come to my classes knows these are tools that I don't like and I don't use myself. So all of our synthetic currencies will soon be available in our next release, probably, hopefully less than a week or two out. You know, this is an incredibly powerful tool. And before, it would take just a tremendous amount of memory to, you know, run these with, but now it takes a lot less. So how do you use this to make money? That's the easy part. You, at a glance, can see what the yen is doing, and you have a wealth of information on here. Here's the point of control. All the yen pairs are represented in one chart. And so if pretty much all the yen pairs are going down, you're going to see it go down. You're going to see the hourly moving average of all the yen pairs, 15-minute moving average. If it's underneath the point of control, the most actively traded price during the previous day, it's more likely to go down. You can see here this in the pound. It went up to the point of control is what it's called. When it broke out, you had a huge move up. You know, it pulled back, went up, pulled back, went up, failed to, you know, you have a kind of a, it looks somewhat like a head and shoulders pattern here, and that's a reversal, and it went down. Underneath here, it went up, sell it, went up, sell it, went up, sell it. Obviously, underneath the point of control, it's more likely to go down. Above it, more likely to go up. It's a filter. Same thing with the hourly. So basically, how do you use this to trade with? It's pretty easy. Let's go back to 3 when the markets start to get active. Which currencies trend are up? Well, one, you can use our daily, weekly, and monthly pivot scores to see that the euro is pretty strong. The dollar is weak on the weekly and the monthly trend. The daily trend's up, and you can see it's above its hourly and acts as support here. The yen is weak on all time frames, and the pound's mixed. The monthly trend's down, the daily and weekly is up. So basically, in a nutshell, you can be looking to buy the pound, buy the euro. You can look, if the dollar goes underneath its hourly right here, because the weekly and monthly trend are down, you can certainly sell the dollar. And the yen's just flat out weak. So when the pound broke out right here at 3 o'clock and the yen was already down, you want to buy the pound yen. So let's take a look at that. This is one of the easier ways of trading with this tool. Pound yen, 3 o'clock in the morning, it broke out, the yen was already weak, and of course you're going to get a nice move up. And you can see if you draw the fibs on the last swing, it went up to the 1.618. So what's nice about trading in this way, when these things break out, your risk is small, and in this case the first wave up didn't really give you much more than your risk. Typically you're going to make 1.5 to 3 times more and went sideways right here and had a nice little ascending bottom on here, broke out. This is a decent profit target. You know, and you can see the pound didn't, if we go back and look at the index, it didn't continue on up. And in fact, anytime you see on the index where the pound, you know, makes a higher high and then, you know, fails to make a higher high, and also notice that this low is lower than this, then, and also look at the FX trend intensity. On the way up there, it didn't have that much strength. It was, you know, trending up certainly against most pairs, but not violently so like the euro was. This is an incredibly strong trend that's likely to at least try to continue up one more wave. So you could just, you know, look to sell this here at close to 5 because it failed to go higher. Which currency is strong at that time? Well, let's scroll back and look. You know, and I only show 4 of them right here to make it easier. The euro's up above the upper containment bands. This is an area where it's likely to reverse. The dollar's above its hourly, above the point of control, also has some strength. So, you know, if the pound does break down right here and the dollar, you know, goes above these bars high, let's just kind of scroll forward here. They're both kind of falling. You can see the dollar's finding some support at the 15-minute moving average and the pound went underneath it. At this point, you can, you know, a little bit after 5:30, you can say you're looking for buys, or I'm sorry, sells in the pound dollar. Here's 5:30. You know, and really, once it made that high up here, you could have actually started selling closer to 5. So you have this little pullback up here. Notice against the pound dollar, this high wasn't even close to the previous high compared to the index. You know, the pound was stronger against other currencies than it was the actual dollar. You had this nice little 20-30 pip move. Might have shorted right here, but made a small amount. Made a small amount. Now you have a trend line that got hit multiple times. You have a little double top right here. If you drew your fibs on this, more than likely it went right to the fib target. Look, right to the fib target. So this is kind of what is the norm when you're trading one currency that's strong and one that's weak. You go short, you put your stop above here, and this is what your likely profit target is. Most of the time it does go to the first, sometimes the second fib target. Your risk is only this. So you made, you know, 2.5, 3 times more on that trade than, you know, than you risked. And that's the key to trading. Don't worry so much about what percentage of currencies make money and which ones don't. One of the best things that I do is once I see a big move, I kind of wait for the first pullback, and that would be kind of in this area right here. Let's draw a line on there. Trend line off the lows. This is at 7 o'clock. At 7 o'clock, you know, the dollar's pulled back and is kind of finding support. At 7 o'clock, the euro is much stronger than the dollar. So at 7 o'clock, the euro pound would be an excellent one to be looking for a buy. Strong euro, weak pound. Here's 7 o'clock, and you can see it definitely inched its way up. It wasn't, you know, that explosive, but it did go up, you know, 8 to 10 pips. And as you scroll forward, 7 o'clock, you can see this one's kind of going up, the pound's going down, and then, you know, it kind of stopped, and the euro's really not going up. So even though the trade only went a small direction your way, by seeing the euro not explode, you know, you get out of the trade quickly. Here's a good example of how I use this. Anytime you see a big thrust move up, typically it tends to continue. You can see it pull back, kind of inch its way up, thrust it up again. You know, once it breaks out over these bars highs, you want to be looking to buy it. You want to buy it against whatever the weakest one is at the time. Obviously, the pound's pretty strong. You don't want to be buying against that. The dollar's above its hourly moving average. The yen's going down. I might have already shown this one, but the euro yen at 3, a little bit after 3, you can see exploded up from 80, 10, 20, 30, 40, 50, 60 to 70 pips straight up. And you got another opportunity to buy this nice little dip, and that went up another 20, 30 pips, and another dip. You know, let's take a look at some of the other currencies that I don't have up. We'll put up the Swiss, see what it's doing today. So you can see this one also exploded up, and the yen was the weakest one. So the Swiss yen also was an excellent one to be buying after 3. It wasn't as strong as the euro was, but you know, this is the first decent pullback. It went up, another decent pullback. It went up, another decent pullback. It went up, and so forth. Yeah, this is the secret to trading. By knowing which currencies are strong, which ones are weak, you know, you trade the best ones. Let's take a look at the Australian and see what this one did today. All right, so this is a no-brainer. You have currency underneath its hourly, underneath its point of control. It's going sideways in a rectangle pattern, breaks down right here at 330. The euro was the strongest one, and so probably one of the better trades of the whole day was to buy the euro Australian. And you can see, you knew the euro exploded up a little bit before 3, and the Australian broke down a little bit after 3. You have this trade here where it broke out around 42, maybe 90, and went all the way up to 4,400. It's 110 pips, or you know, maybe 105 pips, whatever. Just an explosive move. And these are 5-minute bars, 5, 10, 15, 20, 30 minutes. If you drop this down to a tick chart or a range chart, let's say a 50 tick chart, it's going to download tick data. There's probably many opportunities to get into this explosive trend with super low risk, risking 5 or 6 pips, you know, with a good chance of making 20 or 30. Let's go back and look at that at 3:30. So like I said, having a tick chart up, you know, even though the 5-minute chart just kept going and going, there's opportunities, you know, to get into these trades right here with a very tiny amount of risk. Look, you made 20, 30 pips. I would have probably got out here when it went sideways. And again, right here, another 20, 30 pips, another pullback, and you know, I would have probably got out right here with only 15 pips. I probably would not have bought that pullback. It's already up too much. I'd want a deeper pullback before getting in. This one would be one that I would probably get into. It pulled back a little bit, went up, pulled back a little bit more, went sideways. I would have bought this breakout, got out of half my trade here, you know, maybe a little bit more up here. But that's, you know, the farther up it goes, the more cautious you have to be. But using the currency index is really, and especially our statistical tools. In the past, that's all we offered you is, you know, histogram-based statistical tools that let you see. But when one currency is trending up in real time, you can see that on the chart. The daily, weekly, monthly trends up, whereas the other one's all down. It doesn't take a rocket scientist to know you buy the strongest versus the weak. And just for illustrative purposes, you don't want to trade 2 weak ones against each other. Here's the Australian yen. It's probably going to be very choppy, and that's exactly what it is. You know, whatever one's stronger at the time. Look at how choppy this thing was. Obviously, the yen was the weakest one, but then it kind of reversed its way back. Yeah, it doesn't look that bad actually, but typically you're better off trading one versus the other. We saw that the dollar was also strong today, so the Australian dollar is also a good one to be selling. You wait for a pullback. So first it broke down right here. If you missed that trade, you would have had a small profit right here, small profit right here. You wait for, you know, the fib retracement, 38.50%. This is a 38% level. You know, nice profit here. Huge 60 pip profit on now. You know, just basically trading the strong versus the weak. And in this case, the weak one is on top, so you sell it versus the strong one.